In this video, we're going to unveil the importance of this structure that we consider so crucial for MicroStrategy, and we're also going to explain why all eyes and attention should be on this same critical structure in Bitcoin. Let's begin by analyzing MicroStrategy. As you may already know, we place significant value on this asset, and that's because of its strong correlation with Bitcoin. Take a look at how Bitcoin, represented by the purple chart, and MicroStrategy, shown in green and red, move almost hand in hand. This makes analyzing MicroStrategy extremely useful, as it often gives us early insights into the crypto ecosystem. So what's happening with MicroStrategy? Notice how we're currently following a bullish Z pattern. This pattern highlights a key trend line that, for now, remains intact. But will it hold? What happens if it breaks? At Crypto Insight, we're betting that this structure will hold. So what are we saying here? We're maintaining a bullish stance on the market and anticipate that these upper structures, which you can see here, will eventually break to the upside. This would allow us to continue enjoying the bull market we're currently experiencing. But what if this structure fails? There are two possible scenarios. First, the market could give us a false breakout below this level, a trap. And since this would occur at a market extreme, you already know how much importance we place on such situations here at Crypto Insight. But then what? The key lies in how the market recovers after the trap. Ideally, we'd like to see a swift recovery accompanied by a test of this trend line. If that happens, we could confidently say that the market will likely continue its bullish streak just as we anticipate. However, we need to pay close attention to the price action at this level. If we see a trap below and the price struggles to recover, that's a warning sign. What we don't want to see is the price facing resistance when attempting to rise. If this zone is lost and recovery becomes difficult, we should take note and reassess our bullish outlook for the medium term. Instead, this could signal the start of a bearish trend. That said, let's not panic. This doesn't mean we're heading for a market crash. What we're suggesting is a potential correction within this bullish momentum, a pullback that allows the market to reset before continuing its upward trajectory. In essence, we're talking about medium-term declines as part of a healthy market cycle. As I mentioned earlier, here at Crypto Insight, we're assigning a higher probability to a continuation, so we're still looking up. That said, we remain highly attentive to price reactions in MicroStrategy. Naturally, we expect to see something similar in Bitcoin, as there's also a critical zone to monitor closely. But before diving into Bitcoin, let's analyze Solana's chart, which is providing us with some incredibly valuable insights. Let's zoom out a bit to get a clearer picture. Notice how, after this entire reaccumulation structure, the price breaks upward and performs a test. As soon as it completes the test, it reacts to the upside. This point is also extremely important and can be compared to the trend line we were just analyzing in MicroStrategy. Why? Because after completing the test, we expect the price to continue moving upward. Of course, this upward continuation could also present short-term pullbacks. What's important here is understanding that these pullbacks might retest the trend line we've been discussing. They could even create a small false breakout before re-entering the main structure. However, just like with MicroStrategy, if this movement occurs, we need to observe how the price recovers. That's where the key lies. For the upward trajectory to continue, we'll need to see a swift recovery without any significant resistance. Ideally, we'd also like to see a retest of a key zone, providing an opportunity to join the bullish trend. So we already know that we need to anticipate the trap while closely monitoring its recovery. If after the trap, the price struggles and fails to break through the trend line, we could be entering a medium-term bearish phase. As I mentioned with MicroStrategy, there's no need to panic. This bearish phase won't last forever. Instead, it would likely represent a pause after the strong upward moves we've seen recently. So stay calm and keep a close eye on how the price behaves around these structures. Now, let's turn to Ethereum's chart, but before that...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
On screen, we have the 4-hour Bitcoin chart. Here, we can see the correction of this bearish impulse with a complex corrective pattern where we've labeled the W, Y, and yes, the Z. This bullish Z has already broken its trend line. Let's zoom in a bit to make this clearer. Notice how the price was consolidating in a wedge formation until the wedge collapsed, leading to the breakout of the Z's trend line. Now, what else do we have here? Take a look at this bearish impulse. What are we anticipating at Crypto Insight for this bearish impulse? You've probably guessed it, a correction. So here, we're expecting the formation of a bullish corrective pattern. However, this pattern relies on the preservation of this structure. If we lose this structure, the idea of the Z is invalidated. But wait, what needs to happen for this structure to fail? Of course, Ethereum might give us a false breakout, but just like with other assets after that drop or false breakout, which won't be given much room to fall, we need to see a quick recovery. If the recovery is slow or hesitant, that's when we'll need to abandon the medium-term bullish idea and anticipate further declines. That said, as I mentioned, we're betting on the formation of this Z, so as you might already expect, we remain optimistic. Now, let's move on to the BN 1B chart where we have two trend lines. There's a macro trend line, which I'm pointing out here, and a more micro trend line right here. At the same time, we have this defense zone, which has done an excellent job so far. Look at how it's created a barrier, essentially saying, this is as far as we go. But what are we anticipating here? Naturally, we expect the zone to eventually break to the upside. So what do we need to see for this to happen and for this defense zone to break upward? You can probably guess it's crucial that we don't lose certain structures. The first, in the shorter term, is this micro trend line where we see price compression. Sure, it might give us a false breakout, but only as a trap before recovering and continuing its path upward. Now, what's key here is conducting a cross-analysis of all the assets. Since this zone is micro, it's easier to lose. But even if we lose it, nothing significant changes because we have this more macro zone below, providing protection. So if this micro zone is lost, we'll be watching the price reaction at this more macro level. And this macro zone is absolutely critical. It cannot be lost. We might allow for a small margin with a false breakout, but we'll need to see a swift recovery at this point. So why is it so important to do a cross-analysis and look at what the other assets are doing? It's to create a structural map of the entire crypto ecosystem. If we see this zone fail, we might get confused and start thinking we're on a path with no breaks. But let's not forget that we have this area down here, and we also need to see what the rest of the assets are doing, as they may still be far from their critical defense zones. That's why cross-analysis is always crucial. Let's now take a look at Cardano's chart, also on the 4-hour time frame. Notice how, after these strong upward moves, the price entered a distribution phase, which has since broken decisively through its creek. At the same time, we're left with this upper defense zone, where sellers are clearly stating, this is where we draw the line. If we go any higher, our positions will start turning red. So far, this defense zone has done an excellent job, but we do expect that eventually it will break to the upside. And what are we seeing here? We're observing a bearish impulse, followed by a pause, and we're betting that the price will attempt to replicate the bearish impulse, but fail. This failure could mark the point where the price resumes its bullish trajectory and begins breaking structures to the upside. Now, how far can Cardano fall before we start worrying? Take a look at this trend line, the dotted line here. What would happen if the price comes down to attempt the replication and reaches this area? Well, nothing to worry about. This trend line is nothing more than a macro creep. So if the price visits this zone, it's simply revisiting the origin of the breakout. That keeps us safely out of danger and allows us to calmly anticipate the continuation of the bullish trend. Therefore, you already know, this is the critical area we need to monitor on Cardano. Now, we still have Bitcoin and Polkadot to analyze, but first, let me remind you that registration for our private channel, Crypto Insight Premium, is still open. In this exclusive space, we provide daily live technical analysis of the market, along with updates that we believe are key to staying informed. It's also a place where we share trading ideas and feedback, allowing us to grow as a community and continue learning every day. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI, have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us. We're waiting for you. All right, let's get back to it. On screen, we have the 4-hour chart for DOT, and we can see how after the strong upward moves, a bearish distribution phase has formed here, pushing the price downward and breaking the trend lines of those bullish CES we've been tracking. The story here is similar to other assets, but with a few differences. We're placing a lot of importance on this trend line because we're expecting it to serve as the foundation for the correction of this bearish impulse. So what does this mean? It means we're anticipating the formation of none other than a bullish Z. However, as you already know, we'll be monitoring the price reaction around these levels. If the price breaks below, it could give us a false breakout, but we'll be looking for a quick recovery. The key here will be how strong that recovery is, just like we discussed with the other assets. If the recovery struggles, then we'll need to start considering the possibility of a bearish phase beginning. Until that's confirmed, though, we'll keep looking upward. Now, let's move on to the 4-hour chart for Bitcoin. Here, we can see how the bullish Z we've been tracking also formed a wedge, which has now broken decisively. While the wedge did collapse, it still respected the Z's trend line. So as long as this trend line holds, you already know we'll continue looking upward. On the other hand, take a look here. We have a bearish impulse, and once again, we're expecting the same Z pattern we've been discussing with other assets. So we can clearly see the WY, the Y. Yes, we're anticipating this micro bullish Z. In other words, we're optimistic for the short term. However, as I mentioned at the beginning of the video, we need to keep all eyes on this trend line. If this trend line fails, we might see a small trap, but nothing more than that. If the trend line is lost, we'll need to see a quick recovery, ideally followed by a test. This test is absolutely crucial and represents an excellent entry point for longs. But if this doesn't happen, if after losing the trend line, the recovery is slow and lacks strength, then we'll need to start considering the possibility of entering a bearish phase. So, To summarize, are we optimistic? Yes, we remain positive, but we'll be closely monitoring these critical structures as they must hold to maintain the bullish outlook we've discussed. If you enjoyed this advanced technical analysis, let me know in the comments. Don't forget to like the video, subscribe to the channel, and click the notification bell so you don't miss any future analyses. Also, share this video with your friends and within trading and crypto communities so more people can continue improving their strategies. Good luck with your trades and see you next time.